I feel like a lot of business owners, they might have a business coach or they have business consultants. They might not ever even be working with somebody in our capacity. They might not have traditional liquid assets that most financial advisors need. These conversations might not actually be happening. We don't care about that liquidity. The sooner the better, right? It just creates more optionality in the business. If we're trying to pull levers to then enhance value, it's a multi-year process, right? Even just trying to sell a business can take, on the short end, 9 months, a year, and that becomes a distraction when we're trying to sell.
Exit Plan is a podcast for business owners and those who want to be business owners. I'm always in search of the lesser known stories of entrepreneurship. In the Exit Plan podcast, you'll hear stories from startup to sale and hear from the professionals who helped business owners achieve their exit. Hosted by me, author and private equity manager Dana Robinson, along with my co-hosts and guests, you'll hear real stories, tips, and tools that will help you plan for the exit you want, whether you are still working at a day job or running a business. Let's get started with this episode of the Exit Plan podcast. Hey everybody, it's Dana Robinson coming to you with the Exit Plan podcast. In this episode, I've got a wealth advisor named Matt Rinke talking about exit planning. In fact, I saw on your resume, you're a certified exit planner, and my podcast is called Exit Plan, and I'm not a certified exit planner. So
That's all right.
I have to figure out how to become a certified exit planner to keep using that name on the podcast.
Right, for sure. Well, I think, real life experience is absolutely critical and necessary to everything. So whether certified or not, all good.
Well, let's start with, what does that mean? What does it mean to be a certified exit planner, and what does exit planning mean for you and your practice?
Yeah, for sure. Well, a certified exit planner is somebody who's gone through a rigorous educational background to learn all the different facets to help entrepreneurs kind of maximize their business value and then set themselves up to be in a position to exit the business, whether they want to remain in the business and they're going to exit from it, or be prepared to maximize that value and make sure it's transferable. So when the time comes to actually exit, they can have quantifiable value that they realize from that exit. So whether the exit is in the near term or the long term, it's just part of a journey and a process to help maximize life and the resources in your business along the way.
Love it. I love it, because I think most people who are listening to me are trying to figure out, how do I get value out of my business? And I'm always saying, that to exit a business, to sell business, to get the economics that you want, you have to stop thinking in some ways about the exit and start thinking about, how do you optimize that business and take the benefit of that while you actually own it. So it's even though my theme is like the exit plan, in some ways, do you agree with me? And maybe you can speak to this. A business owner should be thinking, how do I optimize this business for me, and understand that driver will drive more value to the ultimate exit than if they gyrate a lot on, what do I need to do in order to exit?
Oh, 100%. Yeah. I mean, I think for entrepreneurs, oftentimes we think about building a business. For all of our clients, it's like, how do we build our business around the life that we want to have? How does that business get built to provide for the life, the lifestyle, how we want to spend our time that we want to have? And that often gets missed. But at the same time, when we think about business exits and maximizing that value or being prepared for it, I think the same principles apply whether you are going to become chairman of the board of your business and be there to oversee it and you're not in the day-to-day, or you're actually going to sell it to some third party, or someone internally at your company, or to a private equity firm, or to another strategic buyer. And the same principles need to be put in place. And that's, how do I replace myself in this business? And that happens whether you're going to formally sell it or you're just going to step away. That's what helps to maximize value, is that it's not critically dependent on the owner themselves.
Yeah. Okay. So this is a theme that cuts across every business book, every discussion you have with entrepreneurs that are stuck And it's interesting from just the sort of advisory standpoint. It's your tip of the spear as well. You're saying that the number one thing, and that across every business you would help plan their exit, no matter what stage it's at, is how effectively can they stop being the operator, the bottleneck, the one that is spending all of their time running the business.
Yeah, it's either related to that, or it's they're the relationships of all the business. They're the key salesperson and have all the the client relationships roll through them, as opposed to there's other people that can maintain these relationships if and when you're no longer with the business. So whether it's the doing, whether it's the selling, whether it's some of these other critical functions, it's like the owner needs to be removed. And if it isn't, then that value of that business is going to be immensely lower than an equivalent business where there's diversification in talent and people have other people inside the company have those responsibilities, and it's not all falling back to the owner.
Let me use a hypothetical avatar, because I've
Yeah.
seen a lot of businesses at some inflection point in a business. In a service business, it's probably, there's a couple of them, it's $5-6 million in revenue, where an owner's doing pretty well, might be extracting as much as $1 million in owner discretionary earnings, so that there's a meaningful amount of money. And they hear this, because they're going to hear it whether they read eMyth or they realize they should put their business on EOS, or whatever the methodology is. They're hearing it from everywhere. But
Yeah.
what I've seen in my hunt and find and buy business world is the owner's unwilling to spend that money on that maneuver, the maneuver of hiring, for example, a general manager or a sales driver, so that they're, because to do that, they have to go, all right, this year I'm only keeping 300,000 of my discretionary earnings, and I got to take a risk with the 700,000 difference and
Yeah.
hire some people. And there's fear. And in some cases, you can make a mistake. You hire the wrong people. You spend a year spinning your wheels. You're down. You had a year where you didn't get to throw $500,000 into your IRA, or into your investment pool for your retirement. Do you see that a lot in terms of the stuckness of owners that are at a size that's risky to take what they're keeping for themselves and turn around, throw that into trying to get themselves above and out of the day-to-day of the business?
For sure. Oh yeah, absolutely. I think it happens, as you said, a lot of times. They don't want to, they see it as a risk. But I think we need to, on our side, help our clients do personal planning to understand what is that actual investment. You talked about, hey, I need to pay $300,000 to do this. Well, after tax, it's $150,000 for some of these entrepreneurs in California. So what are we really talking about? How might that impact their personal plan? It doesn't mean that they need to be completely absent because they're going to hire this person and they're going to let the rails, the wheels fall off the organization and hiring that person. There's still obviously critical functions that the owner needs to be involved with while they hire that next person that could be integral to their long-term planning. So really, what is that real risk? Can we quantify it? Does it mean not as much money is going into their retirement plan this year? But what might be the improvement in terms of valuation that they might get from their business with them removed? Can we help figure that out? What might that business be worth without them, in the mix versus them staying along? Or do they have to? Has the owner even done any personal planning to say, what if they are disabled? Right. And they don't have a person like this. Can the business even function without them for an extended period of time? So the real risk might not be the hiring. it's the fact that they don't, that they haven't done it.
I like that. That's a great way to kind of turn the table on that fear. Um, because I've even been at the table with a number of companies where the owner, it's very evident that the owner knows that they're the ones stuck in the business, and that selling it is important to them because they're stuck in the business. And when you talk through it, you realize, well, they have the resources to invest in building a team,
Yep.
but to do that, they're afraid of losing the control of the liquidity that they have right now. And to your point, that puts them in a precarious position as you age. You know, there's probably not enough life and disability insurance to even offset the
For
value of having operators in your business that can run it without you.
Yeah.
And to your point, I guess if you take a business that's uh, putting $1 million in owner discretionary income, but requires the owner, a buyer is going to add that back in the reverse, right? You're going to say, well, if I buy this business, I need an operator. So your effective EBITDA might be $500,000. And then let's say they're paying you 4 times that. Uh, versus if you got an operator in the seat and it's portable management without you, you know, you might get 5 times EBITDA and you might drive your EBITDA up a little bit if you have that person actually, you know, if their efforts are accretive before
Yep.
you go to transact. So
100%. And I think, yeah, and the size of the business absolutely matters, right? Do we have a $1 million EBITDA business versus a $5 million EBITDA business? And as you've probably seen, it's like a lot of businesses don't ever transact. Or they think that there's value, but there's not, because it's still all stuck with the risk of the owner. If something happens to the owner, the new buyer is, out,
yeah, and very few people want to buy a job, right? And if they
yeah,
do, the amount they'll pay is a lot less. So if someone refuses to get out of the business, when they sell that business, most buyers are not going to be private equity or professional investment groups. They're going to be someone who will buy a job, and to do that, they're not going to pay you, you know, tons of money. That you might be carrying back half of the deal and hoping that they can perform.
exactly.
What are
Exactly.
some of the things? Talk to me about you as a professional and what you know. Like, I talk too much in my own podcast, and I guess I'm entitled to. But you're the guest. I'd love to learn more about what's the process you take your clients through, and what are some things that you can teach me and the people who are listening.
Yeah, for sure. I mean, for us, really being, there, we really serve as our clients outsourced on a family, virtual family office. And we're
Okay.
integrating all aspects of their financial life, from the business to the personal to the outside investments. We have the 30,000 foot view and help them crystallize their long range, planning possibilities, what they want to create in their life, but also helping on the micro decisions as well, big and small alike. And so when it comes to exit planning, obviously this gets back to the overarching goals of the entrepreneur and helping them quantify, the wealth gap that they might have. Like, what do they need their business to be worth for them to be able to potentially exit and maintain that lifestyle? You talked about it. It's like, all right, I'm earning $1 million a year. I've got a nice service business. It's bringing home $1 million a year. But if I can only sell that for 4 million and after tax I net 3, how is that going to sustain my life for the rest of my life? How can I be financially free? And so we want to be helping our clients vision that what that future might look like, help them truly understand the numbers that allow them to become financially free from their business, whether it's continuing to extract profits and growth of the business and growth of the profits, to we want to exit and we need to increase the valuation. What steps now does the business owner have to tangibly work on their business that fulfills on that overarching personal plan? So, we're looking at all of that to how do we then help our clients de-risk that business? As you said, is there any type of contingency planning in place? Do they have life insurance? Do they have disability insurance? How do we maintain the value right now that there is in place and not risk that as the starting point, and then figure out how do we grow and enhance the value along the way? So, the personal planning, the business planning, it's, everywhere in between. At what stages do we start to diversify outside the company? What's our investment plan if we're going to be extracting profits and not reinvesting in the business? How are we going to manage our portfolio in that way? Are we going to go look to become a real estate entrepreneur? And is that going to distract ourselves from our service-based business? I think a lot of entrepreneurs, they have other entrepreneurial friends. They get deals shown to them a lot. They see other people doing other things and they might want to. So really creating a filter for them to make decisions and to have a framework to say yes to things, to say no to things, and to help them prioritize, hey, these next few years are really business growth focused. And no, I'm not going to go buy a home to fix and flip it. right now, because that's, a 10% ROI, while over here might be multiples and multiples of that inside the company. So there's a lot of different aspects and phases to the work that we'll be doing with our clients.
Yeah, that I can tell you've worked with entrepreneurs. I call that the shiny new toy syndrome, and or shiny object.
Totally.
It's really common, and it's really hard to talk entrepreneurial people out of doing things that might be a distraction.
Yep.
Um, and so I'd love to know, like, if you're able to get in people's kitchen and help them, what are some ways that you're able to help them decide, I'm not going to chase that shiny new object? Is it breaking down the math? Is it like you're their business counselor? Talk about like that piece, because I think there's a lot of people. I do this, and I probably need somebody like you to smack me and say, have you lost your mind?
For sure, for sure. I think a lot of it gets back to what is it that our clients value, and really understanding core values, both personally, but also when it comes to business and investment. What are our investment philosophy, our investment values that we want to apply? And I think for so many people, they don't ever have anything written down. So how do we create investment checklists and our investment criterion? And it's not the financial advisor checklist. Oh, you put it in this cookie cutter pie chart of stocks and bonds and let them do the work. It's truly, how does this checklist fulfill on the entrepreneur's competencies, interests, psychological makeup, past experience, how their time allocation. Are they going to get a return on their time if they're spending it on certain type of investments? So building out their own investment checklist then allows us to be objective. It allows them to be objective around, does this next investment actually fit, as opposed to, hey, my buddy sent me this. This looks like a good deal. This looks like a interesting deal, but does it fit within all the framework that we laid out? And if it doesn't, we'll be saying no to those things, and we'll help hold our clients accountable to them. And then defining around that, when we think about their overall investment plan, like, is it noise, right? I'm just going to throw a few bucks at something, and then it's just noise and doesn't add anything, or it detracts from where they might be spending their time. So we're trying to truly put pen to paper that provides the objective way to evaluate it based on their values, their goals, their history, their competitive advantages, what they know well, what they want if they're going to partner with other people. So yeah, really a due diligence, kind of investment framework and checklist for them.
Yeah, I think that's a great idea. I hadn't thought of that. The only way I've been able to try and talk a few colleagues off the bad decision
Yeah.
has been to try to help them understand the value of their time.
Yeah.
And the problem with a lot of entrepreneurs is they work like crazy for free for 2, 3, 4 years or whatever, and then get a big payout. And so they're used to this starvation, feast and then famine and then feast cycle. But as a lawyer, I know what my time is worth. So I can say, all right, this little angel investment is going to take some money, but it's also going to somehow seep back into my life and take something from me in terms of my time. And if I bill $6.90 an hour, then what's my investment look like if I'm giving this business, 5 hours a month? What is it? Is that's me investing 30, 40 extra $1,000 a year into that business, and do I get a return on that? I've tried that, and unfortunately, most people don't bill their time, so they don't really value their time the way
Right.
they could, right? I mean, you're an advisor. You probably don't bill by the hour, but you could reverse into what your hourly value is, and then you could say to someone, hey, if you want my advice, you want me to be on a board, you want me to mentor you, here's the value of my time. But most people don't do that. I like your checklist idea. What are some of the things that, like, is that a tool you give away? Is that a tool that's just part of when people engage for your services?
Yeah, it's going to be custom to every single client, and we'll bring them through a process, but it's something that we co-create, together, and then it can be tied back to all the different assets that they're going to have and that make up and comprise their, total wealth portfolio, whether it's private equity in businesses, whether it's real estate, whether it's self-directed real estate, whether I'm going to be partnering with folks, and how much of my portfolio do we want with partners, and what do we look for in partners. So it's truly a kind of a co-creation process that will guide clients through.
That's cool. I think that sounds like a great. Doesn't sound like anything I've heard of before. So that's cool. So far, just thinking in terms of, you've identified two of the most common mistakes of entrepreneurs. One is not working their way out of a job while they own the business.
Yeah,
The other is chasing shiny objects. We didn't ask for what the most common problems, behaviors of entrepreneurs are, but since we've got two, do you have a third most common behavioral problem of entrepreneurs that you probably have some strategy around?
Yeah, I really think oftentimes that the entrepreneur hasn't done a lot of the personal planning. I think we see that a lot, is that they're building a business, or they've created they've built a nice income stream and they spend it. They live up to that lifestyle. They don't really know, are they close to being financially free, right? And so how do then we build all the other infrastructures to ensure that that business is providing what they really want in life? Maybe they have the lifestyle, now, but if something happens, they might not be able to continue or sustain themselves. And so I think a lot of times, is kind of going back to what I shared, is how is that business truly built around what we want our life to be and what we see for it in the future? And maybe that's an expanded lifestyle. Maybe we have other things that we don't have in our life right now, but the businesses might just be completely flying blind. It's not emotionally connected and quantifiably connected back to those personal aspirations, what you want for your family, kids' college, moving, second homes, whatever it is that they may want. And yes, they're building it, but it's not truly integrated together. And I feel like that's a vital component, because how else then do you budget? If you think about, people don't like the budget, but if you think about a business owner, the business budget should be built around, the operations, should be built around how much we're going to reinvest into that business, should be built around how much we need to take out to pay all of our personal bills, should be built around how much we need to extract from the business, not reinvest in the business, to reinvest elsewhere to provide, diversification outside of the business. If we don't have all of those things, then we really don't have a true business budget that's reflected back to the lifestyle, that we want to have. So really reverse engineering it and designing the life integrated, with the business.
Do you, amidst your experiences working with business owners, do you find most of the people are coming to you with sort of toward the time where they're thinking, I think I want to transact, I'm not sure how to get the right value, they don't really, and then they're missing these things, the no personal financial plan, the business that's not got portable management, and maybe they are distracted with shiny objects and distractions that take their time and maybe distract them financially as well. Dana Robinson here. Quick plug for my book, The King's Fly Swatter. You can see it here behind me if you're watching this. I've got it in my hand. It's a beautiful hardcover book, printed to make it giftable, something that you can share with a family member, buy as a gift. So this latest book, it's a fable about a person who has a really crappy job. Let's just start there. This is a book that most people can relate to because we've all had crappy jobs. This is the story of Ubar, a servant in the court of a Babylonian king, who masters his boring, monotonous job and then learns to listen to the king, hearing him rule the kingdom while quietly swatting flies behind the king. Eventually, Ubar becomes the wisest and most successful man in the kingdom. The story is fun and it's easy to read, but it's not mythology. It's my story. And as I shared the idea with colleagues and friends, I learned that it was their story. And guess what? It's your story. If you're at a job of any kind, one that you love, one that you hate, one that's just enough to get by, this little book gives fresh perspective on how to leverage that job to get you something greater than a paycheck. The lessons in this parable are entrepreneurial lessons, but not what you might think from the current entrepreneurial zeitgeist. If you or someone you know are looking for a real pathway to entrepreneurship, here's the secret. Your job is the way out of your job. It's counterintuitive, but once you see how it works, you can't unsee it. Learn the way of the fly swatter from the parable of Ubar and from the stories I share from my 30-year business journey. You can get a free copy of The King's Fly Swatter by going to danarobinson.com. Where do you find the people actually showing up, and where should they show up?
It's a good question. I mean, they're showing up at all different time frames on their journey. Like there's not a definitive time, right? People that have showed up that have to make quick decisions, which are obviously suboptimal. Other times where there's farther runway. I feel like a lot of business owners themselves, they might have a business coach or they have business consultants. They might not ever even be working with somebody in our capacity because they might not have a traditional liquid assets that most financial advisors need. So then these conversations might not actually be happening. Either the other people aren't trained in them, or they're just not they don't know how to find groups like us. Where it's not like, oh, you got to have $1 million in investment portfolio for us to work with you. We don't care about that liquidity. So I think the sooner the better, right? It just creates more optionality in the business. I think if we're trying to pull levers to then enhance value, it's a multi-year process, right? Even just trying to sell a business can take, on the short end, 9 months, a year, right? Let alone what do we need? And that becomes a distraction when we're trying to sell, let alone what are all the things that we're trying to do ahead of time to increase growth, increase profitability, which will have a multiplication effect on values. And those things, take time. So the sooner the better. There's not one clear point where I can say, oh, these clients are showing up then. It just, or they haven't really thought of these things and now it's time to broach the subject.
Yeah, I'll call out a real world example of people not knowing that people like you exist. I've been in transactions on the buy side where the seller is having meetings constantly with a financial advisor about this transaction that they're trying to prepare for to sell our group their business. And the guy, it could be a man or woman, but the guy that's there seems to very often in those circumstances just be a sort of classic stock market bond kind of advisor, and they're completely out of their element when they're talking about the structure of the deal, tax planning around the deal, the earnouts and attritions and clawbacks and all of the things that go into a deal. And their only financial advisor is the guy that's got their, doing the trades for stocks and bonds or managing their IRAs and that sort of thing. You find, I haven't found too many people in your position. You typically end up with an investment bank or an accounting firm that ends up kind of substituting for the role of business transaction exit planning advisor.
For sure. And I think, for us, it's like we need to know where we're best at. And then our role is also, how do we build out that team if they don't have it, that they need, or have they outgrown their CPA for the type of planning that we're going to need to do in preparation for this exit. Do they have a business broker? Do they have a banker? How are we thinking about the banker? Is it generic, or are we getting industry specific? We need to be the ones to help them build that team if they don't have it. And some of it might be our knowledge, but it's also our network and, experience working with other groups to help them build that out with best in class professionals.
That's great. Talk to me more about your practice. I want to, again, this feels like a unique conversation where I haven't met very many people that are, I'll call you a financial advisor, a financial-ish advisor versus an investment banker that's going to help you broker the transaction, that's going to give you visibility into like what you need to do to, recast your financials, or an accounting firm that you're doing something really cool. So I want to learn more about it. Maybe you've got some stories or some anecdotes that you can share that sort of talk to how your clients, find you, interact with you, and what you do for them.
Yeah, for sure. No, so I mean, most of our clients are really finding us through kind of referrals. Very much a referral based business. We're not doing a whole lot of marketing and haven't done a whole bunch of podcasts, but it's fun to get out there and
Yeah, thanks for coming.
the knowledge and whatnot. Our team, we're a boutique team. I mean, there's 16 of us as part at the company, and we, each client and their family is surrounded by, I would say, a team of other financial planners, mostly, CFPs. Being an entrepreneur and starting the company, the reason why I started the company, just, my own family's entrepreneurial experience that impacted everybody in our family. And so it's kind of why we're here today. And we've always wanted to serve entrepreneurs in a different way. As we talked about before, like that financial advisor sitting in that meeting who's out of his league, like whether there's a liquidity event or not, we believe that like clients still need to be doing all of the planning. Maybe there's not the traditional stock, bond, mutual fund portfolio, but there's a whole host of other things that need to be looked at and prepared for and considered. And so our role is to serve irrespective of that liquidity event. Yes, we want to be there to prepare for it. Absolutely, in whatever shape or form that shows up in. But how do we have a true partnership where we're helping to grow their financial life in an objective, intelligent way, not be tied to, you've got to put X amount of dollars in an account at our firm for us to collect a management fee off of. Yeah. So we have really a flat fee model in which, our clients can come to us with any type of financial question, big or small. We could be preparing for a transaction, or, we're in California. Should I put solar on my house? Is that a good ROI? Should I, the lease is up in my car. It's a crazy car market. Should we buy or lease it? Like, people just don't know to go with day-to-day financial questions. We want them to use us as that resource, but also, the event-driven, major, life-altering things as well is what we're, helping our clients plan and prepare for.
You alluded to your family's entrepreneurial journey. I mean, is there a story you can share?
Yeah. So my grandfather, Depression era guy. I'm from Minnesota originally. He had a leather glove manufacturing company that kind of built up and eventually sold and exited in the mid 80s, mid to late 1980s, and had a business partner. Never really had a personal plan, never had an investment plan. And he invested he had a stockbroker back in the day. And this was around the time, I don't know if you remember, there's like the junk bond craze of the 80s and, Michael Milken and all these folks. And so his stockbroker at the time basically took my grandpa's nest egg and put it into public companies that went bankrupt. And so the vast majority of his nest egg was gone, within a few years of retirement. Yeah, certainly my grandpa has personal responsibility, but he wasn't the financial planner. He wasn't the, knowledgeable investment advisor. He was the guy who built the glove company, it's a blue collar dude who built a glove manufacturing company. And so, that just, kind of led from one decision to another bad decision, there's a lot of guilt and shame that come along with that, right? Where you could have been set for life, right? His money could have been invested in government bonds at 15% and never touched principal, for 30 years and been truly set for life. So that just reverberated to, who does he trust, right? And then going at it alone and then making other decisions that, didn't work out because, they were probably more emotional, event-driven decisions. And then within a couple of years of selling the business, there was an opportunity to buy it back because the people who he sold it to didn't do the best job. He could have bought it back for pennies on the dollar and probably flipped it again, but then his money's tied up in these illiquid penny stocks that, went bankrupt. And so, it changed generations, right? It impacted generations. It changed how my parents work to help support them because they eventually ran out of money, which, probably unfathomable at the time of selling that company. So that's kind of been the the driving force around how we position ourselves to make sure that people, like my grandfather, have an outlet, and have the ability to have somebody, a partner on their team for all of these decisions. So yeah, pretty impactful.
Yeah, no, I think that's fantastic. I mean, that's a great mission, and I think your avatar fits somebody who you've got great empathy for. That means your trusted advisor role, can't ever be how does your firm make a bigger commission, or how does your firm get more fees? It's you want to be agnostic to the economics in a way, in order to be truly somebody that's an advisor and counselor to business owners that very the maybe you can speak to this. Anecdotally, I think business owners that have not had a significant failure um,
Mm-hmm.
tend to make rash and sometimes bad decisions when they have a success,
Yeah.
and sometimes that's venture backed. I grew a company, sold it, made a bunch of money kind of people, who think they're heroic, and then the next thing they do crashes and burns because they thought that they were magic. But also for a lot of legacy business owners with even an interfamily, transfers for years between family members, they finally exit. They don't know what it's like to fail, and so they sell this business. It's the only transaction they've ever done, and I've seen some bad decisions come. I mean, is it a little bit like maybe your grandfather, but also kind of like, look, I just made all this money and it feels like I got a lot, or it feels like that was easy. And, they forget how long it took them to accumulate that, and they make bad decisions. Have you seen some of that?
Yeah, for sure. No, I absolutely have. I think where we've seen things show up in some cases is the entrepreneur that built a business, had a great, had a really good exit and generated some wealth. And now they think that they're the venture capitalist. And what they then do is invest their money in a whole lot of private companies in non-control positions and completely screw up their balance sheet and completely impact their lives potentially forever because and it's a completely different skill set, building something versus purely investing, and doing something from a place of control versus a place of non-control, and kind of managing that overarching wealth ends up really, really hurting them, and as opposed to maybe going slowly into the process and being more thoughtful and figuring out how big of checks that we're going to write in doing this, and what if it goes wrong, what other avenues or what other wealth do we have to rely on. So we've seen that a number of times with entrepreneurs who have this exit, and then the way that they like the control, they don't want to just put it into the stock market, right? They don't trust
Yeah.
that. But then they're not necessarily the savviest of venture capitalists, and they don't even have that experience, but they had an exit and now they think that they do. So
Right.
we've seen that a number of times, which is unfortunate.
Yeah, for sure. Yeah, it's understanding your limitations, and some of that comes from listening to podcasts like this or others, and learning, about. I mean, angel investing even is technically venture investing. It's illiquid, um, and a lot of people, I think, get liquid, and then they start seeing deal flow, and they don't realize that there's hundreds of thousands of opportunities a year, and that they certainly can plunk down some $25,000 checks on some interesting opportunities, but
Yeah, of
that
course.
that none of them are urgent. You'll never know the next uh, PayPal or eBay,
Exactly.
at that stage. So you end up advising a lot of people around their desire to invest in kind of like that post exit.
Absolutely. Absolutely. I mean, for us, as we said, like the traditional advisor wants the liquidity. They need that money to collect that AUM fee. how do we make our clients better investors? Some of them might already be investing and doing, investing on their own, have other real estate investments. How can we help them professionalize what they're already doing if they're still self-directed in some way versus completely outsourcing the investment management to third party? How do we make them better investors? Or if they do want to go down the path of buying a multifamily building that they've never done before, how do we make sure it fits? How do we go through that process? How do we underwrite it to make sure it aligns with our goals? How do they get financing? What is their balance sheet to look like? We want to work with them to create their plan. It's not our plan; it's their plan. So how do we make them better as investors? And that's just not by, hey, send your money here.
Right.
That's not the path.
Well, I love what you do. How do you garner a breadth of expertise that lets you speak to real estate and publicly traded private venture angel, startups and partnerships and all of that?
Yeah, the team, the background of the team, the experience of the team, lived experience. I think our clients get the benefit of. We've gone through so many different things with our clients along the way that if they've never had an exit, we've walked that path with numerous clients and numerous industries and different types of outcomes that this can shortcut their way if they're going at it alone. So, my background prior to starting my own firm, I was worked for kind of a family office. I worked for a hedge fund, really large hedge fund in the public markets. It was in the public markets, but it was almost private equity in the public markets in the way that we operated. And then being out in California, for 15 plus years having this business, you're in New York City and it's kind of Wall Street. California, it's real estate. Like the name of the game is real estate out here. And so, we've just, with our approach of not having to be tied to assets, the real estate investors aren't investing in the stock market. And so being a part of real estate investment, just, we get so much exposure and experience along the way that I think most other, advisory groups aren't, not rolling up their sleeves. It's just not how they operate. So, our area is entrepreneurs and real estate entrepreneurs, which lends us to be able to support this group.
Yeah. So then your expertise is certainly gained from each of your members' expertise, but then you've got the benefit of every client who comes in is another round of experience and help season you and your ability to continue to advise people. So I guess you're less broad than your breadth. For example, are you helping people when it comes to an IRA with some public stock, or do you hand that off to another advisor?
We have the ability to do that. Except our engagement's not going to be dependent upon that. Like whether we do that, we're often finding efficiencies in our approach because of how, our fee model to say, look, you're paying somebody there. Like there's no additional impact if we take that over. Like we're going to, it's going to be part of the service as opposed to, you're paying double, you're paying twice. So we can find those cost savings. So yeah, we're going to help entrepreneurs, if they need to establish a defined benefit plan, help them set that up to, manage a 401k plan we can do all of those things. And oftentimes it's a how do we save them time? Like the administration time, who's coordinating with their third party administrator and the actuary on the defined benefit plan. Like, so we're helping to save time in addition to think about those, traditional retirement planning strategies and accounts to, the underlying investment of it as well.
Cool. As we get toward the end of the podcast here, I was just thinking maybe you have what are some of the most common strategies? We talked about some of the most common mistakes of entrepreneurs that disable them from creating value and sort of optimizing their business and around an eventual exit. What are some of the top strategies that you find are the most common? I mean, is it defined, you just talked about defined benefits plan. Is that a pretty high up there on lots of people need this who come to you? Or maybe you can say two or three of the top tools, strategies that people that you see people deploying?
Yeah, I mean, as it depends, right? Like the defined benefit plan is good if you've got 6+ figures of extra capital that can be put into a retirement account. So from a tax planning standpoint, we're looking for now lots of different ways to move the needle in tax. That's one of them. That's more of a tax deferral than
Mhm.
tax complete tax elimination. But like pulling up, looking under the hood from the business, where are all the opportunities to move the needle? And that could be, the right retirement plans. I mean, I feel like being in California, real estate has significant advantages. And so we've had clients of ours that own real estate where the spouse isn't working. The spouse can become a real estate professional. When you're a real estate professional, you can now, if you acquire real estate yourselves, you can accelerate depreciation. And that depreciation could be 6+ figures depending on the type of property you buy, which offsets the business income or your wages that you're taking out of the business from a tax minimization approach. So, I mean, there's so many different things that can be considered depending upon how people are structuring their lives. But we often see the real estate avenue having a lot of synergies with the entrepreneur, whether they're buying their own building that might work for them depending on the industry that they're in. And similarly there, you buy the building, you don't need to be a real estate professional. You can group them and get accelerated depreciation through a cost segregation study, and then use that depreciation to offset the business income. So, it's a plethora of different things. And, how do we make them? How do we figure out which works for each client is our goal. There's our responsibility.
Yeah, that's great. I love the real estate plus entrepreneurship. Entrepreneurs, I'm in California, so I've experienced it myself, and that's so defined benefits plans, maximizing real estate, both in terms of asset allocation, but also just to so the listeners know what Matt's talking about. If you own rental property, your depreciation, what you can take against your other income, is capped each year unless you are a basically full-time real estate professional. So if I have $50,000 a year in depreciation right now, as I'm sitting here today, not actually, not a professional, I'm capped at 21,000 a year in passive and depreciation I can allocate to my personal.
Yeah, I mean, you have to have like $150,000 of income, and then up to 25,000. You can use $25,000 of passive losses. But for most of our clients, then the income's too high to be able to do that unless they're fully real estate people. Which in
Yes.
that case, they have no taxable income ever, which is incredible. The real estate. If you're just a mom and pop real estate investor, I own a single family property. If there's losses generated by that property, you really can't use that loss on the property to offset your wages or other business income. If you're
Unless you work 500 hours a year, you typically get licensed, right? So you're saying like it's a common strategy is to have one spouse or partner or whatever in a relationship, get licensed, practice in real estate enough to be full time, and then you have at least more opportunities for allocating more of those losses against the household income. So super good strategy. Thanks for drawing that out, Matt. I think that's a cool one to sort of put a pin in. But in these podcasts, I talk more than I should. But did I miss anything that you think is important for people to understand about what you do and the value that you and your firm bring?
Yeah, no, I think, I appreciate you asking the question. I hope people got value from this. And I think realizing that, your existing team of advisors, I think it's really important to continue to vet them out, to continue to understand their capabilities. And whether that's on the tax side and you've had somebody working with you for years, you can always get a second opinion, right? Like if your tax returns are prepared incorrectly, you can go back 3 years and amend returns. So I would say evaluate your financial team. Are they in a place to be able to guide you for where you want to go, not where you've been? And so whether that's your financial planner, your financial advisor, whether it's your CPA, your estate planning attorney, all of those professionals need to be, evaluated to help you, take it to that next level. And so our role is to help do that, to help build that team for our clients, and so that they can, be set up with, the right strategies for the wealth that they want to create and the life that they want to have. So hopefully that helps.
Awesome. It does. Matt Rinke, illuminationwealth.com is your website. Are you active on LinkedIn or any other platforms?
Yeah, pretty much LinkedIn is the sole place where share updates and resources, and try to be pretty active on there.
Cool. It's Matt Rinke, Rinkey with illuminationwealth.com. Matt, thanks for coming on today.
Yeah, thanks for having me. Best of luck.
Thanks for joining me on this episode of the Exit Plan Podcast. I'd love to hear from you. Feel free to hit me up with questions or comments by emailing me at hello@dannyrobinson.com, or leave comments and questions by calling 858-252-7785. Call 858-252-7785 and leave a message.